so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
cowboy. Give me the fucking money. Get the goddamn money printer out.
Great. The bounty hunter.
We're gonna be so fucking rich. Get the goddamn money printer out. Damn, that song is obnoxious. I love it. What's up, everybody? Marcel Kalinovic, Butcher of Wall Street here. We're live on YouTube and Twitter Space Calls and Discord, of course. Right now, about to kick off this conversation. I'm here with my friend Pantheon AMC and a bunch of other fun folks in the think tank, as well as on Twitter Space Call. We're going to take questions from people in the YouTube chat, on Twitter Space Calls, and Discord all at the same time, because why the fuck not? It's a Saturday. Cheers, my friends. We're going to be filthy fucking rich, and this is an adult channel, so if your children are around, you should probably go somewhere else. Anyway, Pantheon, thanks for being here with us, my friend. I just got this up on my screen right now. The AMC proposals vote is going to be taking place on March 14th, 2023, with 3 different proposals. Would you like to touch on those, and then we'll start taking some questions?
Absolutely. Thank you, Marcel, for putting the stream on tonight. This is going to be some valuable information for everybody who's a shareholder of either AMC or APE. And my presence here tonight is strictly to help people understand the facts of what's in the proxy vote. Then people can go away and make their own personal best informed decisions. I'm not here to sway anyone's opinion. I'm here to just present the facts as they stand here based on this proxy statement. So there's a few things we kind of want to hit right off the start to get everybody understood. There's some misunderstandings of what's going on here within this proxy. And there's basically 3 proposals that are being put up for vote. And boss, interrupt me at any time, man. I'll just keep rolling until you just jump in on me. It's cool.
Go ahead, brother. I'm going to take a nap.
If you have questions or anything.
This is too exciting. How could I fucking sleep through this? We finally got exactly what I wanted, man. I could not be more excited. So take it away.
And one more thing, guys, for background, in the Think Tank Discord, which is free, by the way, what we employ there is a 10th person strategy, right? The 10th man strategy. And what that is if you have the same information amongst 9 people and they all say yes, the 10th person's objective is to say, well, it's now my duty to say, well, I'm going to take the opposite approach. We want to make sure we take a look at this from all sides, right? So we're going to be taking a bit of an approach here tonight on multiple fronts on this thing. Make sure that it's just sharing all the information that we need out there. The 3 proposals. Proposal number 1, to approve an amendment to the 3rd amended and restated Certificate of Incorporation to increase the total number of authorized shares of common stock 524,173,073 shares of common stock to a total of 550 million shares of common stock. Right off the bat, can take proposal 1, we'll talk about this. Then we can put that aside and look at separately proposal 2, okay? Because they're linked, but they're also not linked. We'll make that clear to everybody. What this is doing is it's in the company charter back in 2013 when AMC first incorporated as a company. It had in that initial public offering back in 2013 the ability to sell up to 524,173,073 shares of Class A common stock. We all refer to as AMC versus APE, right? The AMC stock. And that has always been there from 2013. What they're looking to do on item number 1 is just increase the amount of the authorized shares. And remember, everybody, there's a big difference between authorized shares and issued shares. Authorized shares is the amount of ammunition they've got. Issued is the ammunition that they've used. Okay, very big difference. And there's people out there who are saying, and we'll get to the annex. We're not going to leave the annex of this out, guys. There's people saying this 550 minute, they're going to just instantly, we're all going to go 550. That is not what this is. It's the ability to sell up to that amount of shares. Okay. It's always been 524. It's going to jump up to 550, giving them an extra 25,826,927 shares that they could sell up to the company. Okay. Well, good.
Yep. So
Sweet.
it's a slight
So let's
increase in the
put
number of shares available.
I'm going to just take a quick look here in the chat if anybody's confused by that, but it's just the authorized shares. Authorized doesn't mean they've been sold. Not even able to be voted on until they're issued. Everyone's cool on that. So, proposal 1, put that aside now. We'll take a look at proposal 2. Proposal 2 is the big one. It's to approve an amendment to the certificate of incorporation to basically put forward a reverse stock split at a ratio of 1 share of common stock for every 10 shares of common stock. Together with the share increase proposal, shall permit the full conversion of all outstanding shares of Series A preferred stock into shares of common stock. That's another piece of FUD that people are putting out there. Preferred shares are being converted into Class A common stock, not being reloaded back to a total number of 50 million. And we'll get to the annex because people are talking about that and they're not quite as informed on that as they should be. We'll get to that to clarify that for everybody. So proposal 2 is a big one. And what we're looking at here is basically cut it into a nutshell. And we'll get into the details, but it's taking the amount of stock is in the Class A common stock and doing the reverse split of 10 to 1. And the apes taking a reverse split of 10 to 1, then converting them over after that part to become all Class A common stock. Okay? I think we've all known about this, but the things we haven't known until this came out yesterday is what's the order of operations, how quick are these things happening for each other, is there time split apart? There were details of this missing that we're getting to now. We'll spend some more time definitely going through proposal number 2 because that's one that a lot more attention. And to quickly summarize proposal 3, because you guys are probably sick of hearing me talk already. Proposal 3 just allows the company the ability to have one or more adjournments to the special meeting if necessary to permit further solicitation of proxies. So if they don't have enough votes to get a yes on proposal 1 or a yes on proposal 2, proposal 3 they would vote on at the meeting. It's only voted on by the people who are at the meeting or submitted proxies in advance. And I'll explain that in a sec. And if the majority agree on that, then they're allowed to adjourn the meeting and put a hold on it, put it on pause, try and collect more shares, find out who has shares that hasn't voted, and get them to vote. Until they can, and they can do this multiple times, until they can get themselves to a yes vote. That's what proposal 3 is asking. Now, the difference between the ability to vote is proposals 1 and 2 need to have a majority of all of the issued shares. Remember, the total number of issued shares with available to be done, we'd have 517 and change million AMC shares and 929 million and change apes. So there's a total of 1.44 billion votes are able to be voted on, and the majority of that number of votes needs to be represented. Hit a yes for proposal 1 and 2. Just so you know, just for fun, it means 723,715,015 votes needs to be up. And boss, if you would, there's a pie chart graph in the ape chat. You're able to
723 million out of the 1.5 billion in existence, right?
they need to get 723 million of the 1.44 billion exactly.
Yes, sir.
Yes. It's one share more than half. That's what has to be voted on yes for them to get a yes on proposals 1 and 2. If they fail that, they will vote on proposal 3. Thank you very much. So yes, you can see everybody in the bottom right corner. We're looking at 723,715,015 shares. That's the minimum number of votes they need to get a yes. That's one vote more than half of the votes. You can see on this chart, this is another good segue. There's a lot of people saying right now, the yes vote's already baked in. That's not true. Terra has 257 million votes, Vanguard has 94 million votes, and the AMC directors comprise 3.39 million votes. Total number of votes doesn't even hit 50%. Blue part of this chart shows you the votes still needed to get to a yes vote, and that's another 368,526,835. So there's 50.9% of the votes needed just to reach the minimum number to get a yes that still have not been cast. We know Antera is going to say yes. We know the directors are going to say yes. Vanguard, let's assume they're going to say yes. And then from that part, we end up with 50.9% that still need to be voted, that they still need to get. And if they don't achieve the blue part of this pie graph to hit the 50.9, just to reach the minimum 723, then can adjourn the meeting, which is proposal 3. They'll vote on that for whoever's at the meeting or already voted on it previously, and it just needs to be the majority of the quorum. The quorum just has to be 33% of the people who have votes to be able to have the meeting. Am I going down too many holes, or is this making sense?
Makes sense to me.
Okay. Oh, folks, remember, there's a mention in there about the quorum, and I've seen people get that wrong. A quorum is a minimum number of shareholders needed present or via proxy to conduct business via a meeting. So out of the 1.44 billion total votes, 482 million votes have to be either voted on in advance or show up in person at the meeting, of votes, not people, for them to just even have the meeting. Okay, that just starts it. Now, of those people, the majority of them have to vote yes to have item 3, which is the adjournment, take place. But that won't even come into effect if they get the yes vote on items 1 and 2. So we're just trying to spend a little time describing how item 3 or proposal 3 works. Proposal 3 is able to put a pause on the meeting, come back, and then see if they can get the shares to go yes. And if they don't, they can pause it again, trying to get the people who didn't vote to vote. Because another important thing, if you do not vote, will count as a no. If you vote no, or you vote to withhold your vote, counts as a no. They don't need half the votes of the people that show up or vote. They need half of all of the votes, the 1.44 billion votes that exist currently is issued, APES or AMC. That's an important thing to know. So what my point is vote. Everyone needs to please vote. Vote what you want to vote. Make sure you do vote, because failure to vote automatically counts as a no. If that's what you want, that's up to you. But you've seen the numbers of what you need to get to a yes vote, and you know that if you don't vote, it's going to count as a no. So that's some clarification there, and that's backed up, by the way, in Adam Aaron's first interview with Trey. Took place in 2021, where Adam also talked about the ability to how the vote would have to be the half of the fully issued shares, and that backs it up in this proxy. So drop that part for a second. So we've talked about the quorum, we've talked about proposal 1, we've talked quickly about proposal 2. We'll dig some more into that. And proposal 3, we've explained to you now what the need of proposal 3 is. Again, if 1 and 2 get voted yeses at the meeting, proposal 3 doesn't even matter. They won't even vote on it. It's only there to buy more time to try and get themselves to the yes votes.
And I think
You
that's
want to go?
perfect. They need to get this yes vote. Back in 2021, when retail voted no, and because the majority of YouTubers and other influencers out there were telling people, vote no, I don't want dilution, it was the absolute worst decision that they could have ever made. I was trying to scream and shout with what little voice I had, which was nearly none at the time. And everybody was just on board with what Trades and Matt Kors were saying that dilution was a bad thing. But all we've seen from them selling ape is AMC paying off their debt and getting lien extensions and reducing their actual interest required and paid. So they're getting great deals on paying off this debt and actually having to pay less than is actually owed by being able to sell ape. And all they're asking is to be able to consolidate it, increase the share price 10 times by reducing the share count 10 times, which would make 10 times fewer shares for shorts to borrow. And that would make it much more difficult. One could argue, theoretically, 10 times more difficult for them to short the stock, even though, of course, it could still be shorted. Any stock can be shorted. The short positions, percentage of short positions compared to existing shares doesn't change. That remains the same, even if except the fact of the matter is that every share that would have to be bought back would be 10 times more expensive right off the bat. And of course, they're going to try to short it no matter what, whether the price goes up or stays, whether the reverse split occurs or not. Shorts are going to try to short. That's what they do, But the thing,
Cost to borrow.
the cost to borrow would also increase greatly because there would be literally 10 times fewer available shares to borrow, making it much more difficult to borrow. And that's already at 327% average cost to borrow on AMC, which is absolutely massive. Let's see. Let's take a question here. Laser Haas, do you want to go ahead and ask your question, man? I got somebody on Twitter Space Call right now. Laser, if you want to, go ahead, my man. I know you've been waiting for a little while. My apologies for the delay there. We'll start taking some questions. All right, I'm having some trouble hearing you, to be honest with you. Not sure what's going on there with my setup or yours. But all right, let's keep going then. Anybody else has any questions in the Discord or here on the YouTube chat? Go ahead and drop it in right now, and we'll take whatever questions we can, as long as they're not stupid-ass questions. There's no such thing as a stupid question, but there are such things as ignorant questions. And if you're out there spreading FUD or trying to say that Adam Aaron is trying to help the short hedge funds, I think you're an absolute dumbass, and you should get the hell off my channel. Otherwise, if you have a question, by all means, I don't think there's anything as like a stupid question if you're being sincere.
While people are getting questions together, do you want us to just keep rolling?
Oh yeah, we could keep talking about this right now. As a matter of fact, people are concerned about the price getting shorted back down. But if the stock price goes up to $50, $60 a share after a 10x reverse split, well, that means that you still own the same percentage of the company that you currently do. And if AMC has to keep selling ape in order to pay off their debt at at $2 a share of ape, they're going to lose a lot more percentage of the company than if we go ahead and do this reverse split, and then they can dilute from there and sell shares of AMC at 50, 60, 70, maybe $100, $200 a share and pay off the majority of their debt. We've all seen what happened the last two times that AMC sold shares. It caused the price of the stock to skyrocket in January of 2021 and in June of 2021. So I was really upset when retail voted no for AMC to be able to sell more shares in order to pay off their debt. So Adam Aaron did the right thing for the company by issuing ape, and it forced short hedge funds to not only have to short AMC, but now they had to short AMC and ape, greatly increasing the number of shorts against the company, meaning that if there ever is a short squeeze, they would be much more volatile than it ever would have been without this conversion. Not to mention they were able to pay off a lot of their debts, restructure a lot of their current lien notes and current debts as well, and bettered their financial position. So I think it was an absolutely wonderful move. Let's see, someone's got a question here. Trek Down Under says, question, if AMC has less shares to borrow because of the reverse split, Won't the amount they need to pay back also be divided by 10? Pantheon, do you want to touch on that, or do you want me to?
I can cover that one.
Go ahead.
So yes, if the number of shorts trek down under, and I hope you're having a good evening. So yes, the number of shorts would also be reduced down, same as everything. But
Lost you there, brother. Citadel shorted his microphone. He was going to tell you the price of each short position that they have to borrow
brokers.
also increases 10 times. Pantheon, you're back. I just lost you for the last 10 seconds there. Could you repeat that for everybody, please?
Can you hear me?
Can hear you now. Yes, sir. Go ahead.
Okay, sorry about that.
Okay.
So what happens is, yes, the number of shares that they need to get to close their short positions or handle synthetic shorts or synthetic shares, yes, those would also get reduced in the same ratio of 10 to 1. But the value of each one is still the same. Okay. Right? And they have less shares to work with, but they also have less shares to close with or cover with, but they also have to find them at a higher price that we're starting off at.
Yeah, there would be a significant, and it would be significantly harder for them to find shares to borrow, to return, to close out their short positions anyway, thus increasing the volatility and the potential for a much greater ceiling price. One could argue, and theoretically, just because the reverse split is 10 times, doesn't mean that couldn't get exponentially more difficult and more expensive for shorts to borrow and shorts to be able to close out their positions. So they could end up paying much more than 10 times the price to close out their short positions. And someone else had a question that just made me think that if that does occur and AMC pays off their debts, why would they take out more short positions if the company is debt free? Because they would probably still have to do it, because if they close out a lot of those short positions, they would probably become insolvent. So I do suspect that they will try to short it after reverse split, probably with limited success, especially if AMC starts selling shares. Because as we've stated, the last 2 times that they sold shares, we saw massive spikes in the stock price, hundreds of percent, thousands of percent, and all-time highs of $77 a share and change. Stanley says, why is this dude Marantz hating so much on Boss? He's trying to force no votes. My friends, if you guys have ever seen Marantz rants, you would know that anything that he says is complete fear, uncertainty, and doubt. And I wouldn't be surprised to see if the guy was being paid specifically to talk poorly about AMC, the board of directors, and other people that are covering the topic. I wish the guy the best of luck, but everything he's been saying so far has been nothing but lies. He's been saying derogatory and even libel type of remarks against Adam Aaron, myself, and many others. I don't pay him any mind, because the guy, I don't lose an ounce of sleep. I could not care less what he's got to say, because it's all lies. So if people are watching him, well, that's their own prerogative. You know, I could not care less, because if people want to sell because of something Marantz Rant says, well, you got played. You know, so do your own due diligence. Let me say that much.
We got a couple of good questions in here in the chat. Do you mind if I grab them?
Sure.
First question we've got from Philip Giacomantonio. The proxy votes go out yet? I have not received one yet. No, the proxy votes have not gone out yet. Now, some people are reporting that they have received emails from their brokers already with the proxy statements. But if you go to page 1 of the proxy statement vote, and it's page 11 of 53, if anyone's looking at the document, you don't have to go there, Marcel, but in there it talks through that the proxies will be mailed in February. And, you know, where I am, yes, I get the proxy mailed to me. I've checked a little box with my broker to have them emailed, and still they force it as a mailed. So that'll be February. It states that here in the proxy itself on page 11 of 53. That'll be February, and the date is not identified within it. So expect the proxy votes to be coming out in February. They will provide, you know, at least 4 to 6 weeks people to be able to make their votes. We'll have ample opportunity once you receive your proxy through email or the mail, get your votes heard. The second question from J Beebs 1, why aren't shareholders outside of the US allowed to vote? And the answer is they are. In Canada, they're definitely allowed to vote, and there are some brokers in Europe, for some reason, and Adam Aaron has talked about this previously, for some reason, don't allow voting. And Adam Aaron has said previously in a shareholders meeting, maybe consider changing your broker if you're with a broker that doesn't allow you to vote on the company's stock that they're willing to sell you. So there are some in Europe that don't allow voting for some reason, and don't know why, but it should be a simple process. But the majority of international apes will be able to vote. I'm an international ape and I get to vote.
Yes, sir. Thanks for explaining that because there's a lot of confusion out there. This is all about brokerages. You know, if your broker dealer doesn't let you vote, well, I can't tell you what to do, and I'm not going to give you financial advice, but you should look into finding a broker that would let you vote if you really feel strongly about it, you know? Mark Brumfield asks, do you feel the price target will 10x? What do you guys think?
I'd love to shine up my crystal ball and answer that question, but I have no idea.
The thing is,
I can't say.
you can't tell what the price of the ceiling would be right now. Like, you could say, oh, well, I want to sell AMC at 5,000 a share or 50,000 a share. But we don't have a guarantee that we would hit 5,000, 50,000, 500,000. I personally believe that AMC could easily get into the thousands. Easily. Does that mean it's going to happen? No, because I don't have a crystal ball, right? So we can't say, well, AMC is going to hit 5,000 a share, so now it would have to hit 50,000 for me to sell at the price that I want to sell. Well, that's fine and all, but that's just a conceptual exercise. You know, like you can't state that now the price has to go 10 times higher just because there's a reverse split with 10 times fewer shares. Because we don't know what the MOAS price will be currently prior to the reverse split or after the reverse split. So to say that the price would have to be 10 times higher is kind of, I don't want to be mean, and I'm not going to be diminutive, but, and so don't take this as that, but it's ignorance, right? And I don't mean you're an ignorant person, but it's ignorance to the fact of that even I am ignorant to what the ceiling price actually is. We could only speculate that, okay, well, I'm going to guess that MOAS is, $8,000 a share. That's going to be the top price. And we can only speculate that after the 10x to fewer shares available to borrow and greatly increased volatility, cost to borrow, making it more difficult for shorts to borrow, etc. And 10 times fewer shares available, all this jazz. We can only speculate that the price would go 10 times higher, especially since the current stock price would go from, say, $7 a share to $70 a share immediately. People need to keep in mind that APE and AMC combined via the derivatives basket called AMC1 are the real value of AMC. AMC by itself is the stock price is not the price of AMC. The price of AMC is both AMC and APE combined, which is reflected in your broker called AMC1. That's the ticker, I should say, reflected in your broker. So, and if you look right now, well, you guys saw what happened to APE in the after hours on Friday. APE ran up from like $1.90 all the way up to $2.60, $2.61 in after hours, and then was brought back down to $2.33 to close out the day on Friday. So I think that they're going to, again, I'm not a financial advisor, and this isn't financial advice, but it seems that they have to try to bring back some parity now. Because the greater of a chance that institutions and shorts believe that this vote actually passes, the greater of a chance that APE and AMC actually become similar in price again. Because they don't want people running out and buying a ton of APE, which would then be converted into AMC if this conversion passes. And that's a big if, I think it will. I think retail is a lot more educated than they were in 2021 when the first dilution was offered. And I think that a majority of people realize that we could have likely already had, huge bucks in the bank through this investment. I don't like calling it a play because I'm not playing. I'm investing. We could have likely made a ton of money off this investment individually, if people had just voted yes to dilution in the first place in 2021, and AMC would have paid off all their debt, and then shorts wouldn't have a thesis to short the company, thus allowing more institutions and retail longs to buy into the stock. But instead, people sadly, voted no. I voted yes, and I was begging people to vote yes. And I hope that that's what happens, because I don't know if it's worth sticking around if retail can't come around. For me, I don't know if it's worth sticking around if retail doesn't understand that voting yes is in their best interest. But again, I'm just one guy, and if whether I'm here or not, the rest of the people will still be here. So don't let that change how you feel. You do whatever you think is right, and I'm going to do whatever I think is right. Every share is one vote. So if you have 100 shares, you have 100 votes. If you have 1,000 shares, that you have 1,000 votes. And we need to get to 368,526,835 yes votes, in addition to Antera's votes, Vanguard's votes, and AMC's directors' votes. So we need to get to a total of 723 million yes votes. And that's going to take retail stepping up and allowing AMC to do a conversion, a reverse split, and selling of their AMC shares, not your AMC shares, but of their own AMC shares, to get their debts paid off and to have cash in hand in the bank. Somebody says, RPJ says, will it be impossible to reach a floor of 100,000 or 500,000 now that we will have way less shares per person worth more? My friend, did you somehow have a guarantee that we were going to hit $100,000 a share anyway? Because there's no guarantees in life. I understand that a lot of people like the idea of $100,000 a share. Sure, so do I. Do I think that's realistic? I mean, come on now. Come on.
Think of this like a formula, right? We've got some unknown variables, and one of the variables in this formula is, are the apes going to hold when this thing starts going? That's a huge question, and I'm going to hold. I know other people that are going to hold through it. When this thing starts moving, are people going to freak out and sell early? Are they going to, and maybe early for them isn't, maybe that's not early for them. Maybe it's early for others. It's all in perspective. Are people going to hold and try and reach those higher numbers? And I'm not talking 100,000, 500. I'm not talking that. But I'm saying, are people going to see more than what we've seen to date? Are we going to see a new all-time high? Let's start with that. The question is, are people going to hold for that? It's a big question that people have to look in the mirror and answer to that for themselves, right? How much do you believe in what we're doing? How much do you believe in the DD, in the information, and everything that's been uncovered? And how confident are you in what we're doing here? Right? And that's up for each person to decide for themselves. It's an impossible question to answer without knowing the variable of, are people going to wait? Look at the GameStop run back in 2021. And if they had held and hadn't sold, and of course they didn't know that back then, right? That was the first time that happened. That was new for people. They knew that. If they knew then what they know now, thing would have had the opportunity to go much higher. Instead, they took off the buy button and people got out. You can't fault them for that. But now we know better. We know kind of what these tricks are to a next step. So it's an important part of the puzzle, folks. And I also see Don Tomato in here says, WTF, okay, so I can't vote in Europe. Don Tomato, that is not what I said. There are some brokers in Europe, who, for some reason, don't go through the voting process for their people. And Adam Owen has stated there are others that do. And ask your brokers if there's going to be a problem with you being able to vote. And if that is a problem, maybe you should consider a different broker. That's up to you to decide. Not everybody in Europe is stuck without the opportunity to vote. Let's make sure we get that really clear.
Yep, people have the opportunity to vote out of, overseas, outside of the United States. You just have to ask your broker. And if they don't, then you need to consider if it's worth it to you to move to another broker in order to be able to vote. I can't answer that for anybody at all. So thanks for bringing that up, Pantheon. Woody Wooderson, huge shout out to you, man. Thanks for your support. You're too kind. Says, what's up, guys? I'll be doing a breakdown of how dilution looks with no votes and yes votes on my stream tomorrow on Telegram. I'll send you the breakdown, and I'll share that with all you guys on Twitter and here on YouTube as well. He says, P.S. Yes votes equals smarter dilution and less shares to get the job done. So Woody Wooderson's run a breakdown of dilution, of possible dilution outcomes with if we vote no and if we vote yes. And he says that if we vote yes, that there's a much greater possibility of smarter dilution by selling fewer shares to get the job done. And it's only common sense. Why would they sell billions of shares? Why would I want them to sell billions of shares of Ape to pay off their debts when they could just sell a few million or a few 100 million shares of AMC to pay off their debts? You know? Also, Woody says locates are going to be the absolute worst after a merger and a reverse split. Do you think the cost to borrow is high now? Because it's only going to get much worse. It's not going to be cheaper for the shorts to borrow. And even though some people tend to think that they can keep this up forever, none of these funds have unlimited money glitches. This isn't Grand Theft Auto. They don't have unlimited money glitches, even though they seems like they do. They have a lot of money, but not unlimited money. And Citadel Securities might be able to pull out, record profits by selling securities that they've not yet purchased. Well, where I come from, that's called fraud. That's called fraud. If I sold 1,000 cars and didn't buy a single one, and never delivered a single car to you, I just gave you a title, well, you'd probably be pretty pissed, wouldn't you? And when I had to deliver it, I'd probably end up spending a lot more, as it would be much harder to get each one of those cars the more that I buy and take off the market. I think that's a really easy analogy.
There's a few more things here in this proxy that we should roll through, and I'm sure it's going to answer a lot of people's questions. Do you mind if we roll through a few more of these pieces?
Go ahead. We'll keep taking questions as we go. Shoot.
Okay, so for everyone, as Marcel said to start the stream, March 14th, 2023, 11 a.m., that's the meeting. That's going to be the special meeting where they're going to present to us the preliminary results of the voting, and they're going to show us where it's at. If it already hit the 50.1% for items 1 and 2, they're just going to tell us that, and that'll be it. If they haven't, then they'll ask us to vote on item 3 to reconvene the meeting to a later date and continue to try and collect more yeses to get to that number. So that's the first part. Now, it's for shareholders on record as of February 8th, end of day. So if you're going to buy shares, February 8th, end of day, is the date that you need to be a holder of record of shares of common stock and or Series A preferred stock or APES, presenting the shares of Series A preferred stock. So the APES or the AMC shares you have to be the record holder of that share, whatever that share be of the two, by close of business February 8th. So if you're planning to buy more, get your calendar and figure out your T+2 settlement and make sure that you've done that correctly, right? Don't let yourself in a position where, like on a dividend, you think you could buy at that one date, which is the date that you have to have been registered for by. You have to have your settlement done. So let's just be careful about that, folks. Also, people I saw, somebody in the chat, I forget who it was, said, wrote a question of, so if I'm not in the U.S., I can't attend the meeting. It's not true. There's going to be a listen-only webcast of the special meeting for everybody unable to attend in person. And if you vote in advance, you're considered a proxy for that meeting, whether you watch it or not, right? So there will be ability for people to be there in person, but there will also be, as always, a listen-only webcast. And they are not going to be doing any other business on that date. That will be just discussing these items. And that's the case. Now, the deal of Antera getting shares, and we're all familiar with how that played out before January 1st, it was all dependent upon this vote being called. So when Antera got all the various shares and set up that they did, the deal of that was contingent that this vote must be called. And remember, it wasn't up to anyone who bought the shares to call the meeting. It was up to the company, the board of directors, to decide when to ask shareholders to vote on the proposal to convert APE over to AMC. So that was an important part that I think people should be aware of, and that's on page 4 of 53 on the proxy for anybody who wants to go read that themselves. And please do go read the proxy yourself. Don't listen to just me or anybody else in social media. Please read it yourselves and then ask good questions and push forward. Also understand on proposal 2, reverse split and the conversion. It's all part of proposal 2. You do not have the ability on this to vote yes to one and no to the other, and that you can't vote yes for the conversion but no to the reverse split. It's either yes for both or it's no for both, and it's all held together. So proposal 1 is not linked to that. Proposal 1 increasing the amount of authorized shares to 550 million, that's just fine as it is. Proposal 2, so yes to both the conversion and the reverse split. So just make sure that you understand that when you vote yes to 2, you're voting yes to both. You can't choose one or the other, the reverse split or the conversion. I've seen that question thrown out there quite a bit from people. Also, proposal number 1, increasing the amount of authorized shares to 550 million, that does not get affected in proposal 2. So if we increase from 524 to 550, 550 million cap that they could sell to remains if proposal 2 gets a yes and a yes. So what we can walk through an example of the numbers of what it means for having the shares be reverse split then converted. But basically the 550 million cap will remain in place. That does not get reverse split down into one. Okay, so proposal 1, like I said, you see that it goes up another 25 or so million shares that they could sell. Put that aside, look at 2, get the resolution of 2, then you can look back to 1. And people are asking the question, why are they even asking for proposal 1? Why would you ask for an additional 25,826,927 shares that they're allowed to be authorized? Why would they do that? It's because when they're converting the apes over, need to have the ability to absorb them in. And when they convert them over, they're going to be coming over as preferred stock, then changed into the multiplier that gets them to the votes, right? The AMC shares. So they just have to have enough room. So early on in Twitter, when Adam Aaron first put this out, people were thinking that what they were going to have to do was authorize to increase the total amount of authorized shares from 524 million to like 1.44 billion, move the apes over, then reverse split and take the cap down with it. But that's not what they're doing. They're going to do the split first. They're going to look at them as preferred shares, which are only 9.44 million, move them over, and then those become, for one preferred share equals 10 votes, then they just convert them into Class A common stock, 1 vote each, which is now 90, it'll be 94 million added to it. If this is confusing people, just understand the order of events they've set up. It's just capping things at 550, and that extra amount allows them to pull those into that extra amount and then do the reverse split, but the cap still stays at 550. So I hope that helps people. If not, we'll see. Confused on why we're voting, but okay, says Corey Smith. So Corey Smith, the company is trying to get us to do is to allow them to increase the amount of authorized shares to 550 million so it can absorb the preferred stock of 9.44 million to convert over once it's done a reverse split, right? And then they all become AMC shares. You have to vote to approve that, shareholders. The company can't do that. The company's board of directors can do whatever they want with preferred stock without our approval. Every company is set up that way. It's all part of the initial 2013 IPO for AMC and any other IPO. IPO being initial public offering, the charter of the company. Preferred stock does not need votes from shareholders because preferred stock, in its essence, is a means for companies to be able to fight back when there's a hostile takeover. There's other uses for preferred stock, but that's basically it. Is when somebody comes in, they can decide that they're worth so many votes, they can change the number of votes of preferred stock, and they can move quickly. They don't need to call for a shareholder meeting if somebody's trying to do a hostile takeover of a company. I'm not saying AMC, just a company. And that's why they're able to then multiply the votes on a preferred stock, turn them into apes, whatever the hell they want to do, to make sure they can fight back on a hostile takeover for any company that would be in that position, right? So that's why they don't need our approval on the preferred stock, but they need our approval to convert preferred stock into Class A common stock. That they cannot do without our approval. Few more things here, and boss, interrupt me anytime you want, man. Antera, as part of the agreement, is voting yes to everything, so that's already a done deal. We know that the shares that they have are going to be done. Now, what we also had, I've heard some questions that people say, if you don't own AMC Class A common stock and apes, you can't vote. It's not true. every unit of ape and every share of Class A common stock, totaling 1.44 billion and change, each of those count as one vote.
Yep.
Doesn't matter if you own AMC only. It doesn't matter if you own ape only. It doesn't matter if you own both. Whatever you own, each one is a vote.
Somebody says, how do you figure the cost to borrow will rise? The cost to borrow is based on proportion of shares available to borrow, not total number. This will have zero impact. Okay, I'm going to explain to you here. It's called supply and demand. If there are 10 times fewer shares to borrow, and the cost to borrow is currently already at 327% average as of Friday, well, my friend, there will be 10 times fewer shares available to borrow. So supply and demand dictates that even though it's proportional to the number of shares, it'll be much more difficult to get a share. 10 times harder, as a matter of fact. Go ahead, Cash.
Share location will be a nightmare.
Share location will be a nightmare, he said. And he's absolutely right. Because instead of there being 1.5 billion shares, there's only going to be around 145 million shares total from which to borrow. Therefore, it's an exponentially more expensive and harder to borrow because there are fewer shares available to locate and making them more difficult to locate. It's really quite simple, my friend. Royus Butler, that's not wrong, and you're right. I don't know it because, my friend, well, to be honest with you and to be kind, you're wrong. You could not be more wrong, but it just is what it is. I'm not going to change your mind. You can think whatever you want, but the fact of the matter is, when there are 10 times fewer shares, it's going to be exponentially more expensive and harder to borrow shares. It's easy supply and demand. If there was 10 times fewer oil currently on the market, the price of oil would increase 10 times, and then finding more barrels of oil would be exponentially more difficult. It's really, really simple. And we can't mine AMC out of the fucking ground like you can with oil. Woody Wooderson says, doing some quick math, voting yes and then diluting to get $5 billion takes 130 million fewer shares than if we dilute APE, then merge and reverse split later. So he says that voting yes and diluting AMC to get 5 billion takes 130 million fewer shares than if we first do a reverse split, a dilution of APE, and then merge, and then a reverse split later. So they have to happen in this order in order to prevent the company from having to sell hundreds of millions of more shares to reach the same outcome. Grandpa Barney, thanks for your support too, my friend. Says we need Antero to go along with us and fight off the shorts and push the price up and bankrupt the shorts. We make more money and they make more money. Just my thoughts. Well, my friend, the fact of the matter is that Antero got an awesome deal, and they're going to be voting yes with us as part of the deal with their 257,000 shares. Now we just need retail to vote, 51% of retail to vote yes. I hope that 51% of people are smart enough to do the right thing on this one.
That last point you brought up, Marcel, that was a good one, talking about the person who was writing the quick math about dilution.
Yep.
Okay,
Very much
folks,
so.
apes were created for dilution. That's why they were created, okay? Make no mistake about it. And there's other things that came out of it, like proving that synthetic shares and naked shorts exist, and the math is there to prove that this actually showed that to us. Get into that another time. Here's the options, right? So for people, and I'm not pushing you either way on this vote. That's not why I'm here tonight. Give it this way: going to dilute stock, one way or the other. The votes are yes, and the float comes down to 144 million shares, and they have the ability to sell up to 550 million. It's true. They have 405 and change million shares that AMC could sell without shareholder approval going forward. That's the truth, okay? But what have we also heard consistently from AMC, and quite frankly seen from their actions? We have heard Adam Aaron say, he asked for the 500 million shares. He went on Trey's Trades interview. And he said, we wouldn't dump all of them at one time. That would just be insane. When he first got the apes set up, he came out and said, we won't dump them all at one time for the people. And you guys know who they are, people in our community who do nothing more than just spread fear. They said, oh, they're going to drop 5 billion apes on us. They didn't even create 5 billion apes. They created 944 million apes. They converted 10 million shares into a billion apes and only did 944 million of them. But Adam Aron said at that time as well, wouldn't dump 5 billion apes on the market at one time. That would just be insane and it would decimate everything. Doesn't work that way. Look at the history of the company every time they've issued shares. Now, you could argue, and I'm here to talk through both sides as a 10th man tonight. You could argue that Adam Aron has dropped shares at inappropriate prices, that he dropped shares and units when he probably should have done them at higher prices or held for higher prices, like when he sold it just under $10 in May of 2021 and dropped a bunch of shares then when everybody and their grandmother knew something was coming and something came. And apes sold at 66 cents versus where it first came out at $8. Well, they didn't have the paperwork filed to do it right off the bat anyhow. Could they have sold earlier? Well, maybe we could talk about that till the cows come home, but let's look at where we are today. So, the question of have they always dropped them at the appropriate prices to maximize the shares they sold? I don't think so. It's not going to drop 405 million shares on the market at one possible time, and that's one of the fudsters that's out there. People are saying he's going to take 405 million shares after everything's said and done, assuming we get yes votes. He'll dump them into the hedge funds. They'll use them to close all their short positions, and the whole thing's over. That's not how it's going to work.
That would not even be remotely enough.
And that's the other point. Cash is making another good point. The other variable to the equation is how many synthetic shares, naked shorts, etc. exist. And that's a question I could ask 100 different people and get 100 different answers, right? And if you only think that there's 500 million synthetics that exist, well then your take of the situation is different than others. And so that's the other part. Is this even going to be enough for them to really kill MOAS, to kill a squeeze? Something that we can't prove at this point, but you can look at volume, you can look at the number of shares that have been transacted, how many times the float's traded itself over, knowing that 80+% of retail weren't selling their AMC shares for 2 years. Ask yourself, do you really think that there's 140 or whatever it is million shares that are self-reported by the hedge funds? Not at all, my opinion. However, he's proven us through his actions and his words that he's not going to dump 400 million shares on the market in one freaking shot. So I would like to try and put that to rest, because the other side of that argument is people saying, why wouldn't he do it? Okay, could he do it? Sure, he could do it, but why would he do it? He's never done it in the past. He's never acted like that in the past, and I like to take people's past actions and use that as a judge of what's going to happen in the future, most likely. Past behavior is the best indicator of future behavior. If he dumped 500 million shares on us in the past, well, we could say, well, look at that. That's not good. Now, the pricing of it, I think we could argue that maybe the timing of the pricing hasn't always been up-notch, but when you're in a tough spot, sometimes you get a tough deal. I just wanted to throw that out there. I'm looking at it from a few different perspectives and trying to put a bit of information out there for people to just to think about and consider. The other thing that we've seen put out there is fractional shares. So fractional shares will not be converted, and
get paid cash. They get paid cash. So if they want to get a share for that, they have to round up or round down, right? Either sell a fraction or get a fraction more to round up, right?
Ew.
I think your mic cut out, bro.
Ew. The burger.
Hang on one second. Pantheon, your microphone, brother.
I'm here.
Okay.
Got me?
Yep, got you now.
And you guys are right with the fractional shares. Yep. If you're with ComputerShare, they're gonna pay you out for the fractional share, and if you're a broker, otherwise your broker will decide how to handle it, and the way to handle it is they're going to pay you out for fractional shares.
Yep.
So
and that's a lot of
remember,
shares, right? Like if everybody had a few fractions of a share, that's millions of shares that they wouldn't have to deliver. They would just pay out in cash, and thus helping out the broker dealers and the shorts and preventing the price from reaching proper price discovery, because they would then eliminate many shares off the market if everyone has a 0.2, 0.5, 0.8 fraction of a share sitting in their accounts.
And if you've got multiple accounts, guys, don't add all of your shares up and say, among my 4 or 5 whatever accounts, these are my total shares. And yeah, that rounds up nicely. That's not how they handle it. They do it per account. So if one account you've got, 205 shares, and the other account you've got 573, or whatever the hell your numbers are, in each account, combine your APEs and your AMC, then divide that down, right, per the rules of how this is all going to work. And if you have a decimal point share, you're going to get paid out for that decimal point, right? So make sure that you guys take a look at that. You may want to opt off. So that's not financial advice, but I'm certainly not going to let them pay me out a fractional share on a conversion. It won't happen.
Oh, absolutely not. Absolutely. I don't even own any fractional shares, because fractional shares are a scam in my opinion. But hey, that's just what I believe. I have nice round numbers.
And if you don't have fractional shares right now, you might have fractional shares when you guys do the calculation.
What do you mean? Elaborate.
So, for example, if we've got, let me just pull up a little quick calculator here to make sure I'm doing this right. If you've got 224 shares, let's say, divide that by 10 after the conversion takes place, you're going to end up with 22.4 shares. Your 4 shares of your 224, you'll have now a 0.4 of a share on your conversion. 0.4 is what they'll pay out. You'll end up with 22 shares. You can do another way. If you've got 10,001 share, divide that down by 10 with the split, you'll have 1,000.1 shares. Whatever
Gotcha.
You've got in your account.
Yeah, that's true. You're right. So everyone has to add up in each account. This is how many APE shares I have, plus this is how many AMC shares I have, divide by 10. So add your AMC with your APE, and then divide by 10. And if it divides to an even number, then you'll get an even number of shares. But if it divides out to something like Pantheon says, 10,000.1, you got to do something to make sure that it divides out to 10,000 flat, or whatever, 1,000 flat or 100 flat shares. You don't want it to end after your division in a decimal point. Otherwise, you're going to get cash for that. So yeah, that's a great point, man. I hadn't really considered it like that. It's not just about what you currently have in your account; it's what you'll have after the division of 10. So yeah, that's a very good point. It's very smart, and I'd like to say thanks again to you, Pantheon, and everybody else, including Woody from the AMC Telegram group, for putting this simple math of a sample position up for us. Also, he tells us clearly, if AMC were to do a merger and then a reverse split first, they would need to sell 130 million shares more, 130.5 million shares more, compared to if they do the conversion, merger, and reverse split. They would need to sell much fewer shares, 130 million fewer shares of the company, which equals less dilution at the current prices, which would be APE at around $260 a share, which is not anymore. It's at $230 a share, and the price per merger after the merger and the RS being approximately $81 a share. So it's an easy call in my book, but it's a complicated thing, and I understand a lot of people are going to be kind of caught in the middle and not quite understand. But I really urge you to think about what you want to happen with your money. Are we on a path that you're willing to continue down, or would you like to see something change? If you would, then maybe you should vote on it. If you don't vote at all, if you say, I don't really feel like it, I don't know how, well, that's going to be a problem, because your vote will automatically be no. If you don't vote, your vote will be a no vote. So I know as soon as I get the email from my broker dealers, I'm going to go to each one of them and vote yes, and make sure that I'm going to add up my AMC and APE in each respective broker, and then I'm going to divide it by 10 and make sure it equals a nice round even number. I don't want any fractional shares after my conversion or reverse split. Corey Smith asks, so shorts get their debt wiped? No, man. Anything that we said says that shorts wipe their debt, man. This has nothing to do with shorts wiping their debt at all. The short percentage doesn't go away. The number of synthetic
They
short.
can never weather the ever, never,
That's true.
unless they think with AOC, only then.
Yeah, the only way that they could wipe their debt off is if they bankrupt AMC. If they continue to short AMC all the way down to zero, by whatever miracle, then there's a possibility that they wouldn't have any debt, and they would get to walk away with whatever gains or losses that they had, and it would be tax free. Because when a company goes bankrupt because of getting naked shorted in the ground, like Virogen, which shown on the Wall Street Conspiracy, and many others that's happened in the past, Blockbuster, Toys R Us, you name it, the shorts don't ever have to buy anything back. Therefore, they don't have to pay taxes on anything that they sold but have not yet purchased. That's free money. That's free money.
That's why they synthetic into a plan. They never plan on covering ever.
Exactly. And that's why we're in the position that we're in now with such leverage over these assholes that have been shorting the company, because they never expected to have to buy back all these FTDs and synthetic shares and naked shorts and shorts marked as long and rehypothecated shares and married and divorced puts. They never expected to have to close out their ISDA contracts and actually buy back the shares. And that's the problem for the shorts. That's the major problem, is they thought that they were going to short AMC into the ground during the COVID pandemic, as well as GameStop. Melvin Capital and all these other guys got overzealous, and they shorted the shit out of the company, out of both companies, and they've continued to do it. They've done it via all the things that I just mentioned, tokenized
Yeah,
securities.
they got way over leverage.
And it's greed. It's greed. That's all it is. They don't fucking care about you or I. They don't care about any of these fucking companies. They don't care if there's not a single movie theater left in the world, or a single GameStop, or a single cancer curing company. They don't care who they bankrupt. They just want to make money. They're not evil. They're just greedy pricks. So you got to decide what the fuck you're going to do. And if you see everything going great into the future with everything that's happened in the past, then fine, carry on. But if you want to see change, you need to think about how we can make that change happen. That's why I'm here.
The only time they cover is when the margin call.
Yeah, somebody says, without actually knowing, blah, 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 how will this force them to cover? I thought Ape would, but we saw how that went. How is this different? Hope you see. My friend, issuing Ape was never going to force them to cover. I have never said this in my life. It's just retail assumed that that's what it would do. Issuing Ape created many, many more naked shorts and short positions against AMC, because now instead of just one ticker, there are two tickers which need to be shorted. All it did was put another dagger in the heart of the short hedge funds. Issuing it does not mean that they had to close their positions. And doing a conversion and a reverse split does not mean that they'll immediately have to convert their positions. So naked shorts. Go ahead, bro.
Yeah, well, you're right. That's not the reason they was made for.
Exactly. That's not what Ape was for. Ape wasn't to cause the MOAS. And doing the reverse split and the conversion and the merger is not to cause MOAS either. It's to better the position of the company and to make sure that I don't lose every dime that I've invested in it if these assholes manage to succeed in shorting it down into the ground. Because there are 1.5 billion shares available right now of AMC and Ape combined. And who's to say what could or couldn't happen, but AMC's gotten pretty low. And a lot of people don't realize this, but who was telling you guys that AMC was going to get back under $8 a share? I was.
We were.
We were, all of us. Cash and I here were specifically saying this over a year ago. And a lot of people looked at me and thought I was a shill, thought I was a piece of shit for it, when in reality, I'm just telling you the truth. And what did I do? I kept buying. I bought shares of AMC all the way up previously from $10 all the way up to $76. I bought shares at those levels and everywhere in between. And then I bought shares from $76 all the way back down to $4 of AMC and Ape. I bought shares of Ape. You guys watched me on this channel if you've been here for a while. Because neither of those, in my eyes, are the all-time highs. AMC at $76 is a steal. But there's a level of shorts, a level of manipulation going on in the market that I knew that the price of the stock was going to come down. But that didn't deter me from buying, because I'm not desperate to sell my position. I'm not desperate to make a fucking quick buck. People that came into this looking for a quick buck and over leverage themselves, well, you made a fucking mistake. Because there's no such thing as a quick buck in life. You have to work for every... I've always had to work for every fucking dime that I have. I never got anything for free. And I didn't expect that to start when I invested in AMC. The only way that we will see shorts have to cover is through a global financial collapse, which currently people are thinking isn't going to happen because of a little bull run in the middle of a bear market. FOMC meeting is coming up Monday, Tuesday, and Wednesday. The Fed's going to come out pissed off because nobody's taking them seriously. And Jerome Powell is likely not going to embrace this market pump. He's going to continue raising interest rates and holding rates at an elevated level for a very extended period of time. In September 29th, 2008, there was the largest one-day loss in history on the stock market. After the Fed pivot, they lost nearly 59% of the entire S&P 500 at its lows in 2009. But 4 weeks after the September 29th largest one-day losses in history, Volkswagen, as it was owned 55% by Porsche with 12.8% short interest, hit its all-time highs of $1,000 a share as they settled with the short hedge funds and the government in order to get this price. But retail investors that own around 85% of the float, excluding ETFs, 90% of the float, including ETFs of AMC, are not really interested in settling. I'm not here to settle. I'm not here for $1,000 a share. I'm looking at much higher numbers personally. That doesn't mean I may not lick my ice cream on the way up before it melts. But I've got so many shares and contracts that I don't have to sell a single share to extremely high levels. I could make hundreds of millions of dollars, if not billions, without selling a single share. And something we mentioned earlier is if retail had held back in January of 2028, January 28th of 2021, the stock price could have gone much higher. But even more so, if retail would have exercised some of their call contracts, the broker-dealers would not have been able to afford to buy them back, as they would have had to buy them back at any price. And what this means is that as they had to buy them back at any price, the price would have gone to astronomical highs. Here's the interview with Thomas Peterfy, the CEO of Interactive Brokers, IBKR.
Yeah, goddamn, it's in the black hole. It's in the lights.
Here he is discussing during the GameStop hearing. Listen to this.
Thomas, good to see you again. Thanks for joining us. My first question is, are you surprised and or disappointed not to be a part of the hearing tomorrow?
Oh, no, I'm neither surprised nor disappointed. This is just fine with me.
Just fine. I can imagine. So what do you think will be the focus? Because there's lots of angles here, whether there was insider trading, whether the likes of Robinhood hurt their customers, and whether the likes of Citadel are abusing their power. What do you think is the key focus and the likely outcome?
So what I would like to point out here, that we have come dangerously close to the collapse of the entire system, and the public seems to be completely unaware of that, including Congress and the regulators. So let me explain to you that on January 26th, Game had closed at $77 a share. The following day, it closed at $148. The following morning, on January 28th, the stock opened at $355 and traded up to $408. At the same time, Game had 50 million registered shares outstanding.
GameStop had 50 million registered shares outstanding. He's talking about GameStop specifically because that is what the question was discussing.
And the short interest of 70 million shares. In addition,
so that means they owed 50 million shares plus 70 million shares, 50 million outstanding and 70 million shares of short interest.
There were about 1.5 million calls.
and 1.5 million call contracts. Each one of those call contracts represents 100 shares. That's
which would call for 150 million shares.
150 million shares plus 50 million shares plus 70 million shares.
When the short,
I don't like gamma, baby.
Yep. Listen to this.
when the short, when if the shorts, if the longs repay their margin loan,
Remember, he said if the longs repay their margin loans, meaning if you didn't have a margin loan anymore and you bought a call or you went ahead and exercised your call contract.
and exercise the calls, they
He said calls, CALLS. If the longs, meaning retail holders, had exercised their call contracts,
brokers would have been obligated by the rules as they are today to deliver to them 270 million shares, while by only 50 million shares existed.
they literally had only 50 million shares and they needed 270 million shares if retail had exercised their call contracts. MOAS could have already happened if retailers would have realized that you don't need to buy shares if the buy button gets pulled. All retail has to do is exercise some of their call contracts. People could sell some of the call contracts and theoretically use some of that profit to buy back. Not to buy back, but they use some of that profit to buy shares by exercising calls. It's really that fucking simple.
Use the premium to exercise.
Right. Use the premium made off of the selling some of your long calls, for example, in order to exercise other long calls. I don't have to come out of pocket.
So when the shorts cannot deliver the shares, the broker representing the longs must, by the rules of the system, go into the market and buy the shares at any price, pushing the price into the thousands. So as the price...
If you don't understand why this is relevant right now, I don't think I can help you. If you don't understand why this matters, I'm sorry, but you're missing the entire picture. The fact of the matter is, when the buy button gets pulled again, I plan to sell some of my calls for a premium, a very hefty premium. For example, in June of 2021, some of the call contracts that I had purchased for $18, $19, $21 were all of a sudden worth $5,000, $6,000, $9,000 per call contract. Yes, per contract.
Higher, the shorts default on the brokers. The brokers now must cover themselves. They push the price further up. So the brokers default on the clearing houses, and you end up with a complete mess that is practically impossible to sort out. So that's what almost happened. To avoid this in the future, the SEC needs to immediately call for reporting of short interests on a daily basis, because they are currently only reported twice a month. And I think they should increase margin requirements on shorts by 1% for every percent of short interest. That would solve the problem. This is a gaping hole that didn't have before, because short squeezes are considered market manipulation, which is illegal. But so therefore nobody did it. But with these social platforms, people can just chit chat and suddenly a short interest emerge without pointing at any one person who is guilty, right?
So Thomas, I mean, it's extremely complicated, and they'll have to try to explain all this market structure in between some of the populist grandstanding from members of Congress tomorrow. But ultimately, who are you saying is to blame, if anyone, for what happened?
No, it's nobody. Nobody is to blame. There is a hole in the system that we immediately have to stop.
The market's broken, ladies and gentlemen.
Which is short interest reporting?
Short squeezes. Sorry?
You're saying that is the short interest reporting. That's what was happening here? That was the problem?
No, the problem was that there is no increased margin requirements on shorts as the short interest increases. As a matter of fact, most people don't even know what the short interest is because it's only reported twice every month.
See, most people don't even know what the short interest is. This guy had no idea how badly upside down IBKR was. That's why Interactive Brokers, along with Robinhood and many, many other brokers, had to pull the buy button. They didn't have sufficient shares to deliver to people that were buying AMC and GameStop and COS and several other stocks. Period.
Yeah, so much for the risk departments.
Yeah, the risk department didn't really gauge that situation very well. And so what he's saying here is that there's a massive problem with the market. The markets are fucking broken. Period. Period. And the only way this is going to get fixed is until after a financial collapse and after a mother of all short squeezes occurs. Because the DTC is not going to margin call these guys necessarily. But when all of these intermingled banks and hedge funds and prime brokers and family offices, etc., are all margin calling each other because they're getting margin called from somebody else, it's going to create an absolute shit show. And then the broker dealers are also going to get margin called by their prime brokers, etc., all around the world, as they have to deliver on those shares that the hedge funds and family offices and shorts didn't properly report, because all they have to do is report twice a month, and they can report shorts is marked as long easily.
Yeah, you're right. The right thing to
I know I'm fucking right. This is a retarded amount of gamma that's about to happen. You know, like that. People do not understand the reality of the situation. This situation is so bad that these shorts will never close out their positions until they are forced to do so by the rest of the institutions that are lending them money. They will never.
goddamn right.
So these proposals aren't necessarily, they are not in any way to cause a short squeeze. APE worked as intended by allowing AMC to sell some to pay off some of their debt. It also forced more shorts to increase their short positions much, much higher, because there are now two tickers that needed to be shorted, not just one. And then when they're put back together, those don't just disappear. There are still twice as many. So if there was, say, 100 million shorts previously, now there's, say, 200 million or 250 million. So even after they're put back together and a 10x, a 10 times reverse split, a 1 to 10 reverse split occurs, there's still, 150% more short positions than there were before APE was created. It's really quite simple, but you have to understand the market mechanics. And you can tell here that this lady had no idea what the fuck he's talking about. He might as well be speaking Chinese or Russian to her. She had no clue what he's trying to say. This is meant to be complicated. It's meant to be confusing, because institutions and market makers do not want retail to be able to understand what's happening. And that's an absolute fact. C. Davis asks, should I sell my AMC shares and buy APE shares? This would give me more shares after the vote. My friend, what if the APE to AMC conversion doesn't happen? What do you have then? What if the conversion does not pass? Think about it like that. So if you should sell your shares, like, I'm not going to give you that kind of financial advice. But think to yourself, what if you do all that and then the conversion doesn't pass? What do you think is going to happen to the price of APE? We got to think about all the possibilities. So
we're here because of the situation on AMC. And if people start, this is just my opinion, guys, if people start dropping their AMC all to get all apes, they'll start doing that. We're going to cap ourselves off at the knees, folks. All of us. It's my opinion.
Yep. I agree. I agree with you completely. Let's see. All right. Somebody asked, what is the short interest of APE? Well, that doesn't really matter, because the short interest is self-reported. They mark shorts as long all the time. They borrow the same shares 8 to 10 times in order to to deliver these shorts and shares, to close out their shorts or to cover their short positions. So it's all self-reported, my friend. And even still, we're looking at almost 23% short interest on AMC. 23% reported short interest. What do you think the real short interest is?
Yeah.
What's up, Pantheon?
You know, one of the big topics. I'm sorry, Cash. You go ahead, my man.
No, go ahead.
One of the big topics, boss, that's been in the community since Apes come out is QSIP changes.
Yeah.
And
Yep.
we have a confirmation that in the proxy, page 12 of 53, if anybody wants to see it. Yes, the question is, will the new common stock, after a conversion and reverse split, will that be issued under a new QSIP, CUSIP? Answer is yes. The reverse stock split is approved and implemented. Every 10 shares of issued and outstanding common stock you own will be automatically converted into 1 share of common stock under a new QSIP, and new shares of common stock issued upon conversion of Series A preferred stock and APES will also be issued under that same new QSIP, because you're taking AMC, you're going to reverse split it, you're taking the APES, you're going to reverse split it, you're going to merge them together. It all comes under a new QSIP number.
Yep.
Well, based on the digging that I've done, QSIP change alone by itself, it's not enough to force all of the short positions to have to be closed. You agree or disagree with that, Mr. Boss?
I agree. See, theoretically, when a QSIP is changed, naked shorts have to close out their positions because the broker dealer is going to want to deliver those shares, return those. They're going to want their borrowed shares back. And if there's naked shorts out there, it's not the DTC or the SEC or FINRA that's going to be telling the naked shorts to close their positions or cover. It's going to be the broker dealer that lent those shares. The broker dealer is not going to lose money because of a short hedge fund or short family office. They're going to want their fucking shares. So whether it causes the short squeeze or not doesn't really matter, because they could very easily, if the broker dealer doesn't care to get those shares back, if that rolls into the new QSIP number, the shorts don't disappear. It just rolls all of those shorts into the new QSIP, and there's now 10 times fewer shares for them to borrow, making it harder to borrow.
It could cause a lot of problem with share location, though,
Exactly.
along the way.
Exactly. 10 times fewer shares means it 10 times harder to locate. Really, it's really simple.
This has been a thing that a lot of people have been talking about on the whole topic of QSIP changes, and our guy Randall Cornett has done some, and shout out to Randall Cornett, man, that guy's awesome. He's done some good homework, and a combination of a QSIP change and a company name change is what seems to be something that could cause problems for these guys in some examples. But a QSIP alone does not appear to be something that would trigger that, and that's something that's been misinformed to a lot of people in the community, and we just want to should we hit that topic quickly? So
It will forgo with the slumps.
Madam Secretary.
Another thing I want people to realize here is, take a look at what happens previously. Look at this chart, right? On the first leg of the GDP going down is larger than both the 2008 housing crash and the 2000 tech crash. The first leg up of GDP is also larger than 2008 and 2000. Consumer sentiment, first leg down, is also larger than 2008 and 2000 by a pretty far majority. And then the first leg up of consumer sentiment is also greater than 08 and 2000. What do you think happens next, ladies and gentlemen? Take a look at this massive blood red icicle from the housing crash. Take a look at it during the tech crash. What we're seeing now is everything here, the technology, housing, crypto, emerging markets, you name it. You name it. The used car market, there's going to be crashes all around the global financial sector. It is going to cause a Great Depression. I'm sorry. I don't want to be a doom and gloom kind of guy, but I will always call it out as I see it. Always. And to think otherwise, I think is absolutely childish. And what we're seeing right now on the stock market, it's just another bull run in the middle of a bear market, just like we saw here in 2008 and here in 2000.
We keep it real.
Yeah, we got to keep it real. You know, the fact of the matter is, and that's why when I started this channel, if you've been watching this channel since its inception, the whole thesis has always been the same, is that AMC will run when the stock market actually has a serious crash. And or if there's something else that happens, sure, that's possible. But that will be, in my opinion, the mother of all short squeezes. Because that's when the actual margin calls will start to go out and the shorts will have to close their positions. A lot of people curious, like, oh, well, what about these other catalysts that you've mentioned? Those are just catalysts. None of those things mean that the fucking mother of all short squeezes is going to occur. Not Phase 6, not Evergrande, not every single one thing. You know, Evergrande's court case for bankruptcy is coming up in March of 2023. But one single thing like FTX going bankrupt or cryptocurrencies, or they're just adding to the calamity. Those are catalysts that lead to where we're going. Nobody said that one of these one catalyst would be the cause of the entire, of the mother of all short squeezes. It takes a giant conglomerate of issues and problems that are unknown unknowns to lead to this kind of point, to lead to this to where we need to go as investors in this company. And the fact of the matter is that the company is going to be greatly manipulated until it can't be. And that's what we saw happen in January and June of 2021. Plain and simple. Full disclosure, I have my puts on the SPY, my calls on the VIX, because I really do believe that later this week or the week after, this bull run's going to come to an end. That doesn't mean I'm saying the market's going to crash tomorrow. This is a very long, drawn-out kind of thing. You know, in 08, 09, it took a long time for the market to actually crash. It took a couple years, from 07 to 2009. But that one day in September 29th of 2008, we saw like a 13% drawdown on the SPY. That's history. And I wouldn't be surprised to see something like that happen again.
Rate is really very modest. Trying to raise.
Yeah.
To be headed today.
At least
Second.
not forget what was Antera here. What are they here?
Antera specializes in buyouts, mergers, and acquisitions, and making money when those things occur.
Exactly.
And don't forget, I'm not just saying that this is an issue.
And the terrible
Janet Yellen
economic
here
toll that
tells
it's taking,
us
and the terrible health
that
toll
this is
that
an
it's
issue.
taking.
She told us, as testifying September of 2021 in front of Congress under her CARES Act testimony, what the greatest risks to the global financial sector. And we already saw that first risk start to explode. We're about to see them both explode.
Looking more broadly,
this.
what do you assess to be the most significant systemic risks or threats to financial stability?
I think
Watch this.
I think there are threats to financial stability that have come from the growth of activity in the shadow banking sector. We saw some of those threats emerge during the onset of the pandemic. We have, for example, open-end bond funds that guarantee daily redemption, saw massive withdrawals by individuals who wanted to flee to cash, and that can trigger fire sales of assets with systemic consequences. The Financial Stability Oversight Council that I head has taken that up as a topic that we're looking at and examining. There are issues relating to hedge funds and the possibility of leverage there that can trigger financial runs. That's another topic. And more broadly, climate change over time is, I believe, could be a significant risk to the financial sector. And
She's not talking about the climate as in the weather. She's talking about the financial climate, ladies and gentlemen. She's telling us that the greatest risks to the financial stability of the world are stable coins, which you already saw with Luna, Terra, et cetera. All these other and these other exchanges like FTX, FTT, Alameda Research, and these other hedge funds. And now it's time for the rest of the short hedge funds. She mentioned that the onset of the pandemic, they saw them start to emerge. Yeah, what happened in January 28th of 2021? Both the pandemic and the AMC and GameStop run, in which short hedge funds and broker-dealers and family offices and prime brokers and even the clearinghouses were in grave danger. That hasn't changed, ladies and gentlemen. So if you guys have any more questions, let's take a couple more questions here. We're going on an hour and a half now, and let's wrap up this video and wrap up so that people that come later on and want to watch this don't look at it and be like, oh, this is 2 hours long. I don't want to invest that kind of time. So I don't want to drag this on forever.
The last thing we should talk about is the annex.
Go ahead.
Okay, so for everybody, when you're looking at item 2 to vote on in the proxy statement, it's going to refer to the Annex A, which is page 51 of 53. And there's been people already out there throwing out FUD about the numbers that are listed in there, okay? And so what they're looking to do is to amend the third time the certificate of reinstated certificate of incorporation. So when the AMC company did its initial public offering in 2013, they wrote the charter. Charter specifies what they're allowed to do or purposes of everything, but in specific, Section A of Article 4 talks about how many shares they could sell up to and how many types of shares they have. Okay, and there's already one jackalope out there who's trying to say they're gonna the 550 million shares listed on here. Here, I'll read it out to you. The total number of shares of capital stock that the corporation has authority to issue. Authority to issue is not the same thing as issued. Okay, remember that. Authority to issue is 600 million shares, consisting of 550 million shares of Class A common stock, which is what we're voting on for Proposal 1, and 50 million shares of preferred stock. There's already people out there saying, oh, they're just going to reset the preferred stock. No, that's not what they're doing here. When you go back to the 2013 IPO, there was 3 different types of stock back then. There was the Class A common stock, there was the Class B common stock, which was Wanda's shares, and then there was the preferred stock. When Wanda sold the company back to AMC, Wanda's Class B shares got dissolved, and they had to redo the charter to reflect there were no more Class B shares. In fact, you guys might remember some shares, Class A common stock in 2021, went to Wanda Group. That was paying them out of those Class B shares. So they amended this to remove the Class B common stock in a previous change. This change is adjusting the 550 million shares. It used to be 524,173,073 shares. This text that is being referred to in the annex is changing the 524 million to 550 million. Is not resetting the preferred stock back to 50 million. It was always at a cap of 50 million. They are converting 9.44 million preferred shares. Multiply that up and you get the apes out of it, but of preferred stock, not preferred units, 9.44 million of those are being converted into AMC. They have the ability to issue up to 50 million. They issued 9.44 million. This does not mean they are resetting their preferred stock. That is complete FUD. That's coming from a source that doesn't have any effing clue what they're talking about. So that is what the purpose of the annex is, and it's an important part of this, but I wanted to clarify that and cut through the FUD. Thank you, boss.
Thank you, my friend. Appreciate that. I wanted to bring up another fact is that, the continuous net settlement is a major problem, CNS. It's the third tier of counterfeiting, basically. That occurs at the DTC level. The Depository Trust and Clearing Corp is a holding company owned by the major broker-dealers, and they have 4 subsidiaries. They are of interest, the DTC, the National Securities Clearing Corporation, they are the clearinghouses. The DTC has an account for each broker, which is broken down to each customer of that broker-dealer. These are electronic entries, okay? And the NSCC processes transactions that the broker-dealers, between the broker-dealers with a central clearing source and in order to operate the stock borrowing program. When a broker-dealer processes the sale of a short sale, sale of a short share, the broker-dealer has 3 days to deliver a borrowed share to the purchaser, and the purchaser has 3 days to deliver the money. If this doesn't happen, that becomes a failure to deliver. And in the old days, if the buyer didn't get his shares by the settlement date, 3 days after the trade, he took his money back and undid the transaction. But when the stock borrow program and electronic transfers were put in place in 1981, this changed. At that point, the NSCC guaranteed the performance of the buyers and sellers and would settle the transaction even though the seller now has a failure to deliver on the shares that he sold. The buyer has a counterfeit share in his account, but the NSCC transacts if it were real. Therefore, it doesn't matter if the shares in your account are real or synthetic. What matters is that when you sell or buy, you will get the price that you're supposed to get. There are multiple tiers of synthetic shares going on here, all the way up to the DTC. And at the end of the day, if a broker-dealer has sold more shares of a stock than he has in his account with the DTC, he borrows shares from the NSCC, who borrows them from the broker-dealers who have a surplus of shares. So far, the system is in balance, and for any given stock, the net number of shares in the DTC is equal to the number of shares issued by the company. But the short seller who has sold naked, he had not borrowed shares. And the same thing for the short sellers that are marking those shorts as long. They can cure their failure to deliver positions and avoid the required forced buy-in by borrowing the share through the NSCC stock borrow program. That's why your broker-dealers desperately want to borrow your shares. That's why your broker-dealers desperately want you to join in the margin, get into margin and get a margin account, because any margin account can have their shares lent. When a broker-dealer has a net surplus of shares of any given company in his account with the DTC, only the net amount is deducted from the surplus position and put into the stock borrow program, the net difference of those available shares. So the broker-dealer does not take a number of shares from his customers' individual accounts. The net surplus position is loaned to a second broker-dealer to cover his net deficit. So let's say a customer at the second broker-dealer purchased shares from a naked short seller. These are counterfeit. The broker-dealer delivers those shares to his account from the shares borrowed from the DTC. The lending broker-dealer did not take the shares from any specific customer's account, for example. But now the customer at the second prime broker has real shares in his account. The problem is it's the same real shares that are in the customer's account at the first prime broker. The customer account at the second prime broker now has a real share, which the prime broker can lend to a short who makes a short sale and delivers that share to a third party. Now there are 3 investors with the same counterfeit shares in their fucking accounts. And ladies and gentlemen, that's why I decided to create Lit Exchange, because I'm tired of this happening, and I'm tired of these guys creating synthetic shares and then processing retail orders through the OTC, which distorts price discovery. Retail's getting robbed. And I'm a retail investor. I have no problem coming out there and saying that. Because the DTC stock borrow program and the debits and credits go back and forth between the broker-dealers, they only deal with the net difference, the continuous net settlement, if you will. It never gets reconciled to the actual number of shares issued by the company. As long as the broker-dealers don't repay the total stock borrowed and only settle their net differences, they can grow a company's issued stock. This is literally the playbook for creating synthetic shares from one broker to another. This process is called continuous net settlement, and it hides billions of counterfeit shares.
It was meant for liquidity, but now it's grossly abused.
Disgustingly abused. So if you guys want to Lit Exchange, if you guys want to learn more about Lit Exchange, you can go to litexchange.app as shown here with no letter E at the beginning, litexchange.app. We are not a licensed broker dealer, but we've been working on it since September of 2021, and I'm currently in the process of getting my 4 different secure financial advisor certifications, including the Securities Industry Essentials certification, Series 7, Series 24, and Series 63, as sponsored through Lit Exchange as the broker dealer. Once we are actually, receive our licensure through FINRA, I'd like you all to know that this is not a solicitation to buy, sell, or hold any securities or products of any kind. And if you'd like to sign up for the beta tester positions, we are full. There are over 15,000 people, I believe, that have already signed up. But you can sign up for the wait list in case some of them are not approved. We'll never sell or give away your email address or any of your personal information. But this process that we mentioned is called continuous net settlement, and that's how they hide billions of counterfeit shares that never make it to the Reg Show radar screen, as the shares are borrowed from the DTC. They're treated as legitimate borrowed shares. It's really, really simple. And for companies that are being attacked like this, the counterfeit shares created by the CNS program are thought to be easily 10 or 20 times the actual disclosed failures to deliver, and the true CNS totals are only obtained by successfully serving the DTC with a subpoena. The SEC doesn't even get this information. Only the DTC has it. So going to SEC headquarters and protesting isn't going to do anything because the SEC doesn't have access to that. Only the Depository Trust Corporation has those totals. The actual process is much more complex than this, but the end result is accurate. And that means, in my opinion, I wouldn't be surprised to see minimum 50 billion shares of AMC and APE actually exist. Now, I don't have hardcore proof of that, but I've seen the shorts marked as long. Hundreds and hundreds of fines have gone out. I've seen the rehypothecations, the married puts, the divorce puts, married calls, divorce calls. You name it. Is the contract out there.
The volume is trading.
And the trading volume is disgusting. And X clearing and CNS counterfeiting are used to create an enormous reserve of counterfeit shares. This is referred to as strategic failures to deliver. Most people would refer to these as a stockpile of counterfeit shares that can be used as market manipulation. The disclosed, one emerging company for which we've been able to get or make reasonable estimates of the total short interest, the disclosed short interest, the available stock lot, and fails to deliver has 50 buried counterfeit shares for every failed to deliver share, which is the only thing that the SEC tracks. Consequently, the SEC has not acted on shareholder complaints that the stock is being manipulated. And they won't. They will not. Therefore, my protest is buy and hold and buy some more. Because eventually, it may take years, just like Bitcoin took a decade to go from $20 a Bitcoin to $60,000 a Bitcoin. I'm here and I'm not fucking leaving. On that one, I wish you all peace and wealth. Have a great day, everybody. I've got to call it. Enjoy your weekend. Have a great Saturday. Have a great Sunday. I'll see you guys on the fucking moon. Thank you. Thank you, Pantheon. Thank you, Cash Money, and everybody else for joining us. Appreciate you guys for your amazing questions in the chat. My phone died, so the space call died. My apologies if you were listening on Twitter. Again, thank you, everybody, for joining us. I'm voting yes. Do whatever the fuck you want, but I'm voting yes. Jerome Powell needs to get the fucking money printer out. because when this happens, it's going to make Bear Stearns and Lehman Brothers look like child's play. And the only way to bail out the prime brokers, the broker dealers, the market makers, and everybody else involved is going to be through the Federal Reserve and the United States Treasury's motherfucking money printer. Get the goddamn money printer out, Jerome Powell. Ken Griffin, I want my fucking money. Susquehanna, I want my fucking money. State Street, I want my fucking money. J Squad. I'm gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
I'm gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yeah, we're gonna be so fucking rich, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
give me the fucking money.